Hi, good morning or good day. Welcome to Real-Time Daily Trading Ideas, our global international webinar. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screen, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Friday, 14th of September 2018. Welcome to our trading webinar. We will start like every day with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full long risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything displayed there. Also, some information about retail clients and professional clients. Maybe you know it, or I guess you know it. Since August 2018, we have the ESMA regulation in the whole European Union. Since then, retail clients will have a maximum leverage to choose up to 30 for Forex, for index CFDs up to 20, and only professional clients, if they are legal clients and apply for that, can still get a higher leverage up to 500. If you'd like to know more about that, just visit our web pages, admiralmarkets.com, for example, you can see more about that. Or a picture shows more than 1,000 words. If you trade DAX 30 or euro dollar as a retail client or professional client, the margin requirements will be quite different. 24 euro to 600 euro or 200 euro to 3,333. As you can see, retail client, professional clients, a big difference, and you have the choice. Retail clients will have an unlimited protection against negative balances. Professional clients will get a protection up to 50,000 British pounds, what is round about 70,000 euro. Check also here all out on admiralmarkets.com, or the specific link is displayed here. This is me. My name is Jens. My English, made in Germany. I'm the German guy from Admiral Markets. So we are international broker, over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And like today, on Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, so we get many benefits only with us. For example, DAX 30 or also euro dollar, actual typical spread of just 0.8 points or pips without additional commission. Check all the details out on admiralmarkets.com. There you will find also how to contact us. You can call us, you can send us email, or visit YouTube or Facebook. Everything, of course, is linked on admiralmarkets.com. There you will find also something about our regulatory background. And now enough from my side. Now it's time for Dirk, our day trader of today. Good morning, good day. What's your view to the markets today, Dirk?
Yes, good morning, Jens. Good morning, guys. Thanks for having me on. Just let me transmit the screen. Hopefully everything is clear right now, and hopefully the sound is all right. All right, we just got the Eurozone trade balance of July seasonal adjusted. So that one came in at 12.8 billion. It's supposed to came in with 16.3 billion, so that's a big difference. We'll see what that will have effect on the euro-US dollar rate, which we see right here, hovering around 117.07 or 6 right now. So if you see that in the platform, you see there is an open trade at 117.15.6, which is a short. Stop loss is still a little bit above. It's at 117.44. Why is it at 117.44? Well, just have a look at the chart. If you see that one here, be closing that market watch here just to have a little bit more screen for you. You see the high is around the 117.33, and so that is the usual, might be the usual stop loss scenario for a bear. And so I just put 10 pips above that, a little bit, slightly 10 pips above that, just to be a little bit more protected or give it a bit more room. We'll see if that will be sufficient. And if we dive sub 117, going to the 116.90s, you might be just put the stop loss on the entry so you won't lose anything. We'll see if that happens. We'll see if that works out. We'll be looking on that one in the next minutes again. If you just have a look at the more transparent picture, just zoom it a little bit out, just zoom it a little more out, and you can see, or you might have some kind of a fantasy chart, technical fantasy of patterns. And you will see something like this is the shoulder, and there's a next shoulder coming, and there's the head. So it's something like in the so-called inverted head and shoulders pattern. So it might be working out on that one. If that really works, that might be the wrong trade. I'm 100% sure, then it might be going up the road. So with so-called directions at 117.83, 117.98, and 118.53. So that might be the next target up there. If you see that last candle here, it's a candle with almost 118.51. So that might be a next target for the bears, for the bulls. Just mark that one here. That's not the trade idea. The trade idea is just to see a little bit of a relief from yesterday's ECB day, and just take a couple of pips, or I would say 20 to 25 pips. That's it. I won't suppose that there's a big move down there again, just because you see that the so-called US dollar index. So if that really works out, and you move of the US dollar index is a little bit going back to that 23.6 Fibonacci line, and we'll just mark that with a horizontal line. You might think about scratching or getting near or getting close to 94 again. Might be going to 94.75 or 80. That would be enough. That would be enough to have a euro-US dollar rate definitely sub 117 and direction 116.80, just because of the huge part of the US dollar index is a euro, and you got to see that inverted. If the US dollar index moves up, euro-US dollar rate of course goes down. So just in case you don't know the US dollar index, just have a look on that one. You might trade that one as well via Admiral Markets here. You will find it in the Market Watch as well. Okay, what is going on with a couple of news the last days? Of course, yesterday's ECB day, no big difference as everybody expected. Every kind of a rate, we got this 3 rate types, remained at the same level. So we got the level of 0.00% and 0.25%, and the so-called facility rate. When you just place money at the ECB, you got to pay 0.40%, so that means the target rate is minus 0.40. So that remains on hold. Everything, nothing is new with the so-called monthly bond purchases. They will be starting to to drive that down to 15 billion a month from October on, and will end up at the end of 2018 with doing nothing. So that will be definitely the end of the bond purchase program, they said. So we will see. This is something like which brought up the euro-US dollar rate, and which might have an effect on a little bit more up the road. But that has nothing to do with this kind of an intraday trade to the downside here. Couple of other trades. Have a look at the Nasdaq. This is a Nasdaq short trade because the Nasdaq 100 came back up in direction to the old highs, or let's say it's getting closer. And what is definitely interesting, that the 61.8 level, another 61.8 level, is scratched again. The 61.8 level here is at 7.5 approximately. And this is nothing more than it's something like a short on that around that line. The stop loss level is you see that big candle here. The stop loss level is slightly above the high of that candle. So as you can see, if you count that up, it's directly 50 points from the entry level, and we'll see if that will have an effect the next 2 hours, or let's say very close to the opening of the US session. If nothing works out with that one, you got to drop that trade out of the box and won't be heading into the weekend with an open position like that. Then you got to see another one, which is with a 50 pip stop, which is very, let's say very dangerous, because the Euro-Swiss franc is always good for a sharp decline and getting back up at the same level. So it might kick you out and will be back at the same level even today or the next days. There are a couple of recommendations, even of big investment banks, which are, let's say, give you advice to be long Euro-Swiss franc. That has something to do with the so-called carry trade. If you don't know anything about the word carry trade, just have a look at that one via Google or some explanations. It's worth reading stuff about it, because if if you're interested in that stuff, you gotta invest longer term. That means your entry is at 1 day, and your exit might be the next 2 or 3 days or weeks even, just because you try to get the interest rate on top of with the target rate and on top of with the move of the currency pair. So that means if you have a look at this so-called swap here, you're going to see that the Swiss franc is with a negative yield with 0.75, and the euro, as you know, is with a yield of 0.0%. So if you're going long for a longer term, you got to earn some swaps, and that's the fact. So you got to see if that is going to be interesting the next weeks to come for you, and to have a look at that pair. It's not necessary to step in immediately in that pair, but you just have a look at that pair. It might be interesting if we really get around this 112 back up in direction 115. Okay, other pair is the US dollar Canadian, so-called loonie. This pair is a so-called sell order here at 130, very close to directly 130. Stop loss scenario is almost the same, like 50 pips right here. And the target might be the 129.20s and going back down to 127. So just to inform you about these current open trades. What we are going to do first, of course, is have a look at the German DAX. And as you may know, I just prepared some kind of a board again, which might be interesting for some so-called resistances, pivot points, and supports. Of course, you can implement that via your Admiral Markets platform here as well. You find the pivot point indicator in the navigator and just start it, and it gets implemented into the chart. We'll do that in a couple of seconds. So pivot points might be interesting to the upside. The resistance 1 already got scratched. The next target from the upside for the upside would be this resistance 2 at 12,178. So just to remind you guys, that is especially for the Xetra DAX. You've gone down to support 1, 12,005, and the support 2, 11,955. And the three EMAs, exponential moving average is at 50, 100, and 200. As you can see, that data is from 1030, so it's quite close to that still. I spoke about the gaps the last times, and as you see that downside gap, you see that one at 12.11.12 to 12.135.64. You see the dates from April. And when you go back to the chart, just let us check that chart, of course. Where was that other one? There was the other one. Yes. If you just check that out, you won't see that so-called gaps right here, just because it's I showed you the gaps of the Xetra DAX, and as you know, there are a couple of other so-called DAXs, and of course this is a mix of the Xetra DAX and the future DAX, as you may know. So you won't see every gap. So the gap which is closed is as you can see right here, is in between the so-called 12.135 zone is around here, and it got closed. And the other open gap, if you just check that out, still there's an open gap widely up the road at 13.010.54. That's the one from June, the mid of June, and that one is really down to 12.982 is still open. So if you just check that out, it's from June. You got to see that we have a level, or let's say a Xetra gap going around this area, just to mark it a little bit, that we got a so-called an idea where the gap might be. So that is a huge march up the road. So there's a lot of stuff going up there, and it might be interesting. Yeah, it might be interesting to just have a look at other gaps in other tradable goods, not only the DAX. Just check that out. It's so-called gap strategy. All right, just a couple of goods we were talking about. We spoke about Deutsche Bank. That's nothing new today, nothing interesting. We spoke about Bayer. As I told you, there's another leg down the road. This one, this happened. This really happened. It got down. And we spoke about a couple of other stocks like Amazon, which is going back up to the record highs. It looks like it will right about it will touch it maybe. Okay, then there was another one. Where was it? Jesus Christ! I had yes. Interesting for you, something you don't trade every day. So be aware that there is the spread is a little bit bigger. Okay, so in case you just inform yourself about the spread, getting in and getting out is nothing like trading euro US dollar. Of course, it's not the smallest and the smallest spread ever. So you might be aware that you need to earn the spread before getting out, of course. And interesting is that in a long-term view, that's a weekly chart, this Chinese market here is scratching 61.8 levels again. That's the third time or almost the fourth time it scratched that one and went back up. So it might be interesting to so try a first long scenario here, getting in direction to that 50% level of 1153. And even if we just wipe that 50% level out of our mind because it's not really part of the Fibonacci theory. You got to be sure that it's good to know that it might be going up even to the 38.2 level, which is in direction 12,300. So just in case you don't know anything about this market, just in case you don't know anything about Chinese stocks, about Chinese stock markets, if that is the fact, of course, do not touch it. If you just do it by errors, don't do it. If someone is telling you, like me, for example, just have a look on that one, it doesn't mean that you have to entry or to exit or to short or to be long immediately. Just have a little bit of a research for yourself first before you enter a position like that. So, because if you look at the last weeks or even at the year-to-date performance of Chinese stock markets, you won't scratch your heads because you will see it directly. The Chinese stock markets are the big loser of that trade debate or that trade conflict, and they are some of those markets, some of these markets, sorry, they are going down almost 20 to 21, 22%. So that's a lot. While the US markets are beating every market. It's a really outperformance of the US stock markets. Okay, so I forgot to speak about the DAX strategy or about the DAX points. So what is possible? What is possible is just still a relong scenario. A relong scenario with a target of 12,235. So that might be a long scenario. And if we mark that with the so-called blue trading box here again, or let's say mark it as well, it is a goal to be in direction to that blue box right here. And we will have to insert a horizontal line here as well, just to mark that one here, just to see that is slightly under that Fibonacci retracement of 12,360s. And I spoke about the first step at 12,235. The next step would be getting very close to that one. Okay, good. Back to the euro-US dollar rate, just to check that out. Oops, I want to zoom in just to check that out if this is working, and it looks like it is working and running into the right direction. So anything you can do it old school, for example, or even do it with the new modern tools you just saw at the DAX board. You might be modifying the order and might be moving the stop loss to the entry so that you won't lose anything. So in that case, you even earn a little bit of a mini pip. And that's the fact that we just moved it almost to the entry zone. All right, just to check out if I don't forget anything about the news I wanted to talk about. Of course, there is a lot of talk about the Brexit and about, of course, the pound, the British pound. And if you look at your market watch and look at the Euro GBP rate, which came back a bit, of course, from the 0.91 down the road here. If there is a positive surprise, of course, with the Brexit negotiations, we might be going down to 87 35, which is a long-term 61 Fibonacci retracement. So that might be the overall goal for a couple of days and even 2 or 3 weeks to come. That would be the surprise move down the road if Brexit negotiations are about to be successful. If that doesn't happen, we already read a lot of, let's say, headlines, even from the central bank governor, Mr. Carney, who spoke about if there is nothing like a positive negotiation outcome, even the British real estate prices will tumble or crash about 30 to 35%, he said. So if you just think about that kind of a talk, 30 to 35% of real estate prices are crashing down, you could, it's not very hard, not a tough job to think about what is the outcome and what will be next. So the British stock market will be crashing and will be heading this kind of a trouble will be heading in direction Europe. It won't stop at the sea between Dover and Calais. Okay, Jens, is there something, a special market, something like gold or oil or whatever?
Bitcoin, BTCUSD is one wish market from our participants. So we have 1 or 2 minutes more for BTCUSD safety, please.
Bitcoin. I gotta admit that I don't like that stuff, but everybody is free to trade it, of course. Okay, and just we'll close that one here and close the same stuff here as well, and just check out a couple of levels, and just to have a look from just simply chart technical aspects, where are we heading to? Last high, last low, and just looking for the next targets to the upside, which is, as I always told you, interesting between those 50s and 61.8 retracements, especially here. And we will just implement that horizontal line. And of course, don't forget, don't always look to the upside. On top of that, check out the downside levels again, or as well, let's say. We will implement another Fibonacci retracement analysis from the last downside to this upside here. Of course, we need to simply choose another color, not to be confused by the different kinds of lines here. All right, so let's see what is going to the downside if there is another level just to be marked, and we see that level from 138 and 161 Fibonacci projections, and this is a level of 5,296, so very close to 5,300, and another one to the downside is at 4,965. If you trade Bitcoin, if you trade cryptos, you got to be sure that you watch, maybe have a look at the so-called margin levels. And I'm not talking about the margin levels at Admiral Markets. I'm talking about the margin levels of the CME group. So that's the biggest futures market. That's the one in Chicago in the US. And the so-called Bitcoin futures are always, let's say, worth to have a look on. And if they change something, like hiring the so-called margin requirements to the upside or to the downside, you got to have a look at that one. If that happens, if it happens that they will move it a little bit more to the upside, so the margin requirements getting higher, that will be having an effect on the Bitcoin to the downside. And the other way around. So just in case you did not check that out, and there's a lot of information besides that for Bitcoin as well, not only from the chart technical side, just from the fundamentals on top of that. Might be interesting for you guys. If you trade Bitcoin, you got to be informed about that as well. All right. Yeah, Jens.
So, and like always, as always, the time is our limit. We have 5 days a week, 5 different traders, and our goal is 15 to 20 minutes, and we're having a couple of minutes more like always, but that's fine. Tomorrow is another day, but tomorrow it's Saturday or it's weekend, so I wish you a great weekend. And the next live webinar will be on Monday. On Monday, it's Jay's day. Jay will usually talk about the institutional Forex view. So if you like to see the institutional view about Forex trading, just be there on Monday, same time like today. Greetings from Berlin office. Thanks to Dirk. Bye-bye and have a great weekend.
Short words, because that is the thing I forgot. If you look at your calendar, you got to see, of course, 14th of September, and you remember, not even because I told you or told you right now, 10 years ago, exactly 10 years ago, Lehman went bankrupt. So that big financial crisis happened. And if you look at the current leverage, at the current low quality debt and stuff which is going on, you just might be aware that there's something brewing. So it could be coming into a direction of another crisis. A lot of guys are speaking about that. I don't want to confuse everybody. I don't want to frighten everybody, but you got to be something like a little bit more prepared for some eruptions, for some algo eruptions wherever you trade. Is it Forex? Is it commodities? Is it stocks? So you got to be prepared for yourself, and maybe be a little bit hedged somehow, so that you don't get dragged down to zero somewhere. That's something like praying to you guys to be a little bit, let's say, not afraid, but a little bit to have respect from that kind of a market situation right now, because a bumpy road, there's a bumpy road ahead. Okay, thank you very much for you guys, and have a great weekend. And of course, as Jens already said, Monday is Jay's day, but mine will be next week. Oh, no, sorry, next week I'm not there. 28, I'll be back. Okay, thanks a lot. Have a great weekend. Thank you, bye-bye.